Now, so the election period is over and the year is almost coming to an end. And so today, we, together with Edward KUSEWA, thank you very much for joining us, who is an experienced economist, having worked with a private sector for over 11 years. That's quite a lot of experience, by the way.
Yes, it is. Yeah.
So we're going to take a look at the Kenyan finances, the debt, the credit, and what is the Kenyan, what future is there for Kenyans when it comes to mortgage finances? Yeah. Correct?
Yes.
Well, thank you very much for joining us once again. Let's get right into it. Where does the Kenya's 6-month extension on its 2015 $750 million syndicated loan tell us about the country's cash flow problems?
I mean, we've had issues with cash flow and borrowing and the way we are raising revenues. That has forced us to do external borrowing. We've done domestic borrowing for quite a long time, but it reached a point where these fiscal expansionary projects had to look at external markets. So we did a 750 syndicated loan that was due in October this year.
Yes.
And the Kenyan government was asking those depositors and the people who had given us loan for an extension of 6 months to repay, but most of them were adamant about that repayment period. We also have 2 more syndicated loans. We have a syndicated loan of about 1.05 billion. We also have another syndicated loan of about 115 billion. So really, you know, we really need to be very keen on how we are going to raise revenues for this country moving forward. I think the KRA has an uphill task. We need to expand the tax base. Just going by what the president was saying yesterday, I think he has very good intentions. We need to really cut down on corruption so that we can consolidate a lot of money that we are collecting. I really appreciate the fact that he spoke about the leather industry, because if you were to do a study about the leather industry, especially in Ethiopia, that is actually leading with the assistance of UNIDO, it's a business that is bringing about $300 million to that country as revenue. So we really need to look at new avenues of raising money. Okay,
now, Mr. KUSEWA, I don't know if this is exactly what you're trying to say, but as for what you've said, what I've picked up is, first of all, Kenya is too expensive for Kenya.
Yes, it is.
Kenya is too expensive for Kenya.
Yes,
and this $750 million and the other
syndicated loans,
syndicated loans, the other 1 plus a billion shillings. Would you say that you can see where the money has gone? Would you say that this money is worth it? You can trace the infrastructure and the development that the government has actually delved into.
Well, there's some amount of money that went into development expenditure out of that amount. But most of it was on repayment on certain loans. It was meant initially when they went to the international market to borrow, because international investors always ask, what do you need this money for? And so Kenya was saying we need it for development projects. Unfortunately, part of it went for development projects, part of it went to repay initial debts that were existing. So we really need to come up with development projects that are priority, where we can actually start taking the government to account and they can give us a breakdown of where the money is going.
Okay, so with that said, walk us through the country's debt obligations in 2018 and 2019. Where should we expect our debt to be? Where will we see our debt by the end of 2019?
Already, the Kenyan government is already trying to get another syndicated loan, just to get rid of this other syndicated loan. I normally I know that the central bank is going to do a lot of domestic borrowing, so we are going to see definitely a high, the debt level is still going to go up. It's
going to shoot up, yeah.
So, you know, with that moving, we are still going to see a lot of pressures on our debt issue, and I don't know what the government, the monetary committee is still trying to come up with a clear-cut roadmap of how they are going to deal with the debt and the budget. So it's something that we can wait and see.
All right. Yeah. So you've just mentioned that Kenya is going to borrow more money to clear this debt. It's kind of like the way the middle class, they always say the middle class in every country, we're always stuck there. you borrowed the money to clear this debt, and you go like on and on like that, and it's like we're in a roundabout. We're going round in circles. The Stanbic market, PMI, has fallen to levels not seen in the series of history. We've seen a steady decline in job numbers. How many jobs have been lost to date? And not only when it comes to Stanbic, all the other sectors. Quite a number of people have lost their jobs.
The Stanbic PMI is a tool that actually looks at the index of quite a number of things, including employment and so on and so forth. Manufacturing sector has lost a lot of jobs because there's really no demand, you know, and supply has been hampered. If you look at the supply value chains and demand value chains, all these things have gone under. What I'm saying, and what the World Bank and the International Monetary Fund is saying, is that we should develop the private sector. We should really develop the private sector. Like now, the president is talking about manufacturing. Manufacturing is actually a role that will be taken up by the private sector for us to be able to create more jobs. So if we can start, you know, if we can start incentivizing the private sector by deregulating a lot of things that they need, by giving them, you know, incentives, reducing, giving them support, reducing the tax burden on those people, then we'll see the economy pick up. But if we there's something in economics called the crowding effect, where the interest rates keep on going high. We need to deal with that crowding effect by trying to see how those interest rates can actually be integrated with what private sector is looking for. We also have a very big informal sector, and we need to move the informal sector to the formal sector by making sure that the informal sector is registered. And I really like what the president talked about title deeds, because title deeds is what helps those informal sectors really get loans from the banks. Because if it's access to credit, we need to look at access to credit to SMEs and so on and so forth. And they cannot get credit if they do not have title deeds and so on and collateral.
But how long do you think that this can take to be implemented?
Title deeds is something that the government, I think, is going to speed up.
No, I think the whole situation, title deeds, exactly. I come from a small area in Kibera, and the Nubian community has just been given the title deeds just right before we got into the August elections. But how long will it take? Because we keep on singing the same song over and over again. We need to boost the private sector. We need to support them. So how far is the government when it comes to that? And are they actually listening?
No, I mean, the government, I mean, we have to remain competitive. There's no doubt about it. And for us to remain competitive is to be able, I mean, you've seen over the past few years, the ease of doing business index, just one indicator showing that this government is really committed. But we really need the government to come out extremely clean on issues to do with private sector development, especially on overregulation, on inflationary pressures, on devaluation of the currency. And especially when our currency keeps on depreciating against major world currencies. It's bad for the SME sector. So we really need strong interventions from finance and central banks.
And then also, let's not forget the capping laws by the banks. Anyway, moving on, consumer demand was weak in September. So what triggered the decline?
I mean, it was political risk and uncertainty. Whenever there's a general election globally, people will definitely not be buying a lot of things because of that uncertainty. People hoard money. If you look at the stock exchange, though this stock exchange this time was very vibrant in spite of the general election, something that we haven't seen. In 2013, the shares were plunging. So, but in 2017, we just saw a stagnant, and the market kept on, you know, going up.
There was a serious fluctuation, but it never really declined.
But if you see some of the happenings in corporate sector, with some of those corporate companies like Nakumat and so on and so forth, those contributed significantly to why, you know, consumer demand kept on moving downwards. But basically, it was a political risk situation. From my thinking.
From your thinking, as an expert. Now, and what about the export orders that have also been on the decline from late 2016? We cannot blame that on the electioneering period. And is it the drought?
Of course. I mean, commodity prices globally have been going down. Our currency has been losing. Obviously, there has been a drought situation in this country. And then our export-oriented strategy really isn't coming out, because what is it that we're exporting? If it is coffee, there's a lot of competition. So we really need to look for areas that we can be able to be extremely competitive. when it comes to export markets. So unless the government, and that's one thing I like about the Ethiopian government, is that they have looked at the export-oriented strategy extremely well, and they've seen that they've got a lot of strength, especially in leather industry. And so they've been able to, and UNIDO has actually helped the Ethiopian government talk to some of these people in Italy, fashion houses and so on and so forth, help the industry move. So I think we need to come up with an extremely brilliant export-oriented strategy so that we can help our people export. And unless we export, really, there's really nothing we are doing.
Yeah.
You know, we don't have a huge domestic demand market where we can, you know, sell. Like in China, they have an extremely huge domestic demand.
They work for themselves.
Yeah. But for Kenya, we really need to look at exports. We really need to strengthen agriculture. We really need to strengthen each and everything. That blue economy is an area that we've been talking about. The WTO was here in Kenya. It was all basically about the blue economy.
Yeah.
It's very sad that even after the World Trade Organization had its meeting here, we are still talking about the blue economy as if it has not taken off. It should have taken off and bringing a lot of revenue to this country as a new diversification for finances and revenue.
Wow.
Yeah.
All right, and finally, with all the factors that we have discussed in this particular interview, because we are coming to an end, ladies and gentlemen, including the rating cap, which is still firmly in place.
Yeah.
The banks have, the central bank has refused it. How big a hit to GDP growth should we expect in 2018? And which sectors will be affected? Which sectors, from where you sit as an experienced economist, which sector do you see being affected the most?
Basically, agriculture is one of those sectors that we really depend on. 70% of our GDP
is from
actually 25% of the contribution is generally directly from
it's the one driving
agriculture.
The economy, yes.
Apart from subsistence agriculture, the president yesterday also spoke about commercial agriculture. If you go to countries like Rwanda, they've done consolidation of land and so on to boost agriculture. So and unless you are very keen, I mean, on food security, you can just walk around and see that we have issues with food prices. There's always these fluctuations around food prices. So I think agriculture, health, and obviously mining, which is a new area, those are some of those sectors that may be hit hard if we are not very careful moving up. But we are optimistic. I mean, the energy sector is moving up very well with now oil, and I know we are going to be buying those oil wells from Tulo. Then I think maybe we are going to get revenues from that oil.
All right.
Yeah.
And we are hoping for the best.
Yeah.
Well, thank you very much for making time to come here. And we've broken down quite a number of things when it comes to Kenya's finances and Kenya's debt and credit. This was Sir Edward, I would call him, who's an economist and very experienced in the private sector. You've done Nairobi Security Exchange. And we'll be having him quite a number of times, maybe every week, so that we can break this down properly, bringing you up to speed on what's going on in the business world. But that's just about it for Business Insight this afternoon. I shall be seeing you later on at 9 p.m. with more business news and general news. My name is SHABAN. Stay blessed.